Good afternoon, ladies and gentlemen. My name's Tom. Today I'm going to talk to you a little bit about RMG, but to set a context, I'm just going to take you through a quick idea that's sort of been going through my head over the last couple of days while here at the conference. Everyone talks about the sort of global markets, and maybe it's just a good idea to set a context about the size of global markets. I saw this article a couple of months back, and it really struck a chord with me about what we're doing. So this may be familiar. If it is, I hope you recognize it. If we say that that little square represents $100 billion by value, then the silver market, the above-ground silver stocks in the world, equate to about, today's price is about a billion ounces, about $17 billion. If we look at cryptocurrency, now this was back in November, market was obviously a little bit lower, but at that point in time, Bitcoin was around 100 billion, and you have the others, and then you've got Ether coming through, Ethereum. World's biggest companies totaling at that time about $800 billion in value, a few major examples there. The 50 richest people, so 1.9 trillion, and that's this lot. Recognize some of those faces. Coins and banknotes, so this is physical cash, like actual physical money cash. 7.6 trillion, that sort of size, so these blocks are getting a little bit bigger. Above ground gold, I was quite interested, similar size for the gold market. So physical gold, above ground stocks, and this is data from the World Gold Council, so relatively reliable. Stock markets, lots up there. Of course, there's also the rest of the world. And then global money supply. Now we're sort of really trying to quantify about the size of our market in blockchain versus really what money supply looks like. That's like what we call narrow money. That's like instantly accessible. That's like cash, and that's the physical bit at the top because that's instantly accessible. And then things like current accounts in the black dots. And then you look at like broader money supply, and that's kind of like term deposits and things that's tied up in money, real money tied up. So I'm getting a bit bigger here, and I'm struggling to squeeze it on the page. And then we get to the interesting stuff, which is global derivatives. So 544 trillion, that's a conservative estimate. I tried to get it on the slides. Started here, and I did that, 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 and then I did that, and we kind of got to about the right size for 544 trillion, which is maybe half the real size? Don't know. It's a bit of a misnomer because when you're talking about notional amounts of derivatives traded versus actual real money, maybe you're comparing apples and oranges, and maybe what you should be talking about is the value of those derivatives, which some estimates say is sort of 20 trillion, but still sizable. That's an article by a lady called Sue Chang that was done back in November, and I thought it was really interesting, so I wanted to reference it here and say thank you very much for the insights. There's other stuff in that, so I recommend going to have a look at it. But enough about that, the context. Why is the Royal Mint standing on stage at a blockchain event talking about digitizing physical assets? That's just around the corner. If you don't recognize it, you should go. It's one of the most amazing things we have in this country, the Tower of London. And inside there, that was our home. Back in 886, the Royal Mint was founded inside the wall of the Tower of London, and that's where we started making coins of the realm 1,100 and something years ago. We moved in the early 1800s to a purpose-built facility because we totally outgrew the Tower of London. And then when decimalisation came along, we moved again to our current home in South Wales. Now that is our purpose-built facility, purpose-built for the purpose of creating the coins that we use today. So all the currency that you have in your pocket from the UK, that's minted by us, the new £1 coin, we produce that. We produce coins for the UK, but also for 60, 70 other countries globally. We're good at this. Here's one of our guys making a beautiful £5 coin, not commonly used in circulation, but we make a lot of these. And this is the high security feature enabled £1 coin. We also make bullion, so we make Britannias and sovereigns. What I'm really trying to impress upon you is that we've been making these tokens quite a while. We kind of know a little bit about it. In fact, we've done it globally. We've not just done it here in the UK. We've worked with these mints all around the world, producing that coin there in the corner, arguably the most successful coin of all time, which is the sovereign, a gold coin which traveled the world and was used by people and recognized as a store of value and a payment for goods and services globally. And we commissioned other mints to work with us to produce it all over the world. And we make coins for other countries too. We have the specialism and the capability to make for, as I said, 60 or 70 countries all over the world. And we sell bullion. We sell gold to our clients, physical gold, making those coins. We have a retail offering. We have an institutional offering to institutional investors in physical gold. And we do this every day of the week. So what are we doing here today? We've realized there's an opportunity for us as the Mint to be able to create a digital currency, a digital coin for this market, the gold market. As a manufacturer of gold products, we have the capacity with our purpose-built facility, which contains a state-of-the-art vault for the holding and storage of physical gold, that we could commoditize and tokenize for the first time physical gold. And how do we do it? So this quick, very simple kind of cartoon takes you through the very simple process of tokenization. We take the physical bars, and for every gram that we put into our vault, we create a token on our purpose-built network. So we developed a network, and we developed the operational process for taking gold into our vault, and developed a specific bespoke RMG blockchain, which allows people to buy and hold gold on our network and trade it amongst themselves using blockchain technology for peer-to-peer transfer of value. In time, we expect this to be adopted into a number of trading markets, exchanges, merchanting opportunities, distribution channels, as those that hold wallets containing RMG are able to trade amongst each other or in venues and marketplaces globally to transact gold and ownership of gold. So what is different about this way of owning gold? So I put this up to sort of generate a little bit of interest, but of course that's physical. What we're talking about is digital. And why would anyone want to hold gold digitally? We think there's really 6 kind of attributes here that we think are really transformational about the ability to hold physical gold on a digital basis. Firstly, RMG is real gold. So a lot of things you'll see in the sort of blockchain and the token space are intangible assets. Maybe there's an innovation of technology, which is very worthwhile. It offers some increased utility, some sort of benefit to a network. We're simply using a currency-based open source blockchain code to represent a physical asset. And it's a real physical asset. It's real gold. So for every gram on our chain, there's a gram in our vault. It's your gold. So there are many different ways to buy and hold gold. They could be from things like the physical. You could have coins and you can stick them under your mattress and worry about them every night. You could have physical bars that you have a custodian look after in a Swiss bank if that's your way of holding gold. You can invest in things like exchange-traded funds, which are like equity shares of gold, and they're a little bit different. They're not really a physical ownership per se. They're more of a debt in a trust mechanism, so you've kind of got an exposure to the ETF provider. In this case, what we're doing here is we're saying that if you hold one of these tokens, we are the custodians, the Royal Mint, for the physical gold that sits within our vault. And we present that as safe. So my company, the Royal Mint, is 1,100 years old, and it's owned by Her Majesty's Treasury. So we're 100% owned by the Treasury. So the UK government is safeguarding this physical ownership of gold, which we think presents a very different proposition to a lot of the commercial kind of propositions that are for tokens that may be associated with gold or maybe a fund of gold or something like that. This is direct ownership secured in a site owned by the UK government. And what's transformational about this product is that we're doing this on a zero holding cost and zero storage fee basis. So if you are used to dealing with a custodian for physical metals, or maybe if you have an ETF provider looking after those metals, or if you have unallocated gold accounts and they're charging you fees for servicing those accounts, all of those add up over time and your participation in the gold price diminishes the longer you hold that position. But with Royal Mint Gold, we don't charge any ongoing fees on a regular basis, so your participation remains at 100%. Your gold ownership, if you own 1 gram, 10 years later, you still own 1 gram, and it doesn't diminish as those fees are applied to your account. And it's physical. This is a really important point for us, that if you own RMG on our blockchain, you are able to redeem it. You can bring it to us, you can transfer it to our wallet, and we will deliver the physical to you. So this is a phased approach how we roll this out into the market. We can't immediately go to this day one, but what we intend is that initially we'll do it for institutions who want to withdraw physical amounts of gold, and the longer term we'll have physical gold available through our existing bullion channel, which is for the retail market. And then finally, trading. So we recognize that holding gold on this basis is much more beneficial if it's physical and you can trade it digitally for the opportunity of being able to take advantage of changes in the price. We do anticipate that the decrease in the pain and suffering of dealing with physical gold and the logistics around that, the high transaction costs for dealing with physical, all diminish when we make this digital, and we allow for that free and easy trading of tokens. So the potential for us to move into digital asset exchanges, whether that's through retail brokerage distribution or going through crypto exchanges or going into institutional market-making venues, over time, we expect to add a number of different institutions where you can freely trade RMG and start to use it as an opportunity to come in and out of the gold price. A lot of the time we get compared to other products in the gold market, and it's something I'm a little bit reluctant to engage with, but I'm happy to take on the fight. ETFs are really, see what you find in the gold market, in my view, having been a gold guy for many years, is that most of those products are designed for a very specific target market. Whether it's you're going to be a user of risk management, so you're trading with futures, or whether you're going to be holding gold on a long-term basis and you want to store your gold in a private vault, in a Swiss private vault or something like that. They have very different use cases. We think with RMG we have something that transcends across a number of different use cases, whether it's investment or whether it's a trading opportunity or whether it's used as a payment or currency. And so we have a number of examples there. And I think for me the one that often compares with the ETF markets is that very storage charge. To be able to, in our model, we're kind of changing the business model for like how people hold gold. And rather than having a long-term charge for storage, we reduce that to zero. And long-term, we anticipate that it's the network effect of a trading community of RMG is what drives revenue for our business. How have we set ourselves up? We've established our blockchain. It's live and in existence. So behind that, we have a network of validators. And while we have a proof of work scheme, we're not the power-intensive kind of Bitcoin-based mining scheme where there's a reward. So the cost of being a validator upon our network is relatively insignificant. It has a confirmation block of 2.5 minutes. And we have a number of ideas around how we'll do wallet service provision. But at the moment, BitGo is our wallet service provider for people who want to hold RMG in a wallet. And then we're going to set up a network of operators to basically offer the distribution of RMG into institutional wealth management, into ultimately the consumer markets as well. A lot of the questions I thought I might get in this audience was around the why we've architected a private blockchain or a public blockchain. What exactly have we done? Well, we've kind of done a bit of both. We've made a publicly visible blockchain because we want transparency and we want people to be able to see transactions as they're confirmed on our chains. That's publicly visible. But as the central authority and the custodian of the gold that sits within our vault, we need the capacity to be able to authorize the operators on our network. And this gives us another advantage, which is that in the case where we have a multi-signature blockchain like we do, we've got 3 keys established for every wallet. And so 1 key is held by the wallet owner, 1 key signed by the wallet service provider, and 1 key held by us as a recovery service provider. So in the event of one of our clients losing their key for their wallet, we have the capacity as the authenticator on the network to be able to reinstitute those keys for them. I think it adds to a number of sort of benefits. We have very little mining burden. It's like insignificant. So we can establish a very large network. But really for purpose, that we seek to have ultimately billions of dollars of gold within our vault, we anticipate that we have more than adequate validators in place at the moment. But of course, we work on more. We understand that a healthy network is based on as many validators as we possibly can for the purpose of the network. And currently, we've got about 30 on our network validating blocks. And we think the transaction time of 2.5 minutes kind of far outweighs anything you see in the gold market today in terms of instantaneous settlement of physical. I think that's it's unparalleled. So this is our blockchain. So this is out in production at the moment. You can have a look there. So we're at the stage where we've built the operational business behind it. We have a team of people based at the Mint down in Wales who are ready to support our clients with holding gold on this basis, holding the physical within our vault, and with the capacity to be able to set them up with wallets and then have a wallet architecture behind that. This is powered by BitGo, and they've been with us since we announced the project at the end of 2016. And what we're doing here is we're now going out and showing this to institutional investment and seeking their adoption of RMG and getting people to start testing, buying, and holding gold on this basis. And this is an interesting challenge for the broader physical market. And I think that's one of the things that we've learned in our experience of building RMG is that adoption and how you get physical commodity markets to adopt blockchain technology in this way is almost like a step. You have a lot of people sort of standing, waiting to jump in, but everyone's kind of waiting for that first person to take that first plunge. And we think we're at that point at the moment. And what we really need to demonstrate is that there's a broader exchange community that will take on the trading activity for RMG. And what do we think this leads to? So I think that ultimately I've talked about something which sounds very much like a physical gold ownership. We're proposing that we haven't developed a cryptocurrency in any way. We've developed just physical gold. It's our business. And what we do is we sell physical gold to people. We're demonstrating a different way of owning RMG, which is to hold it digitally within a digital wallet. And I think what this leads to is the potential for people to start relying upon this as a network to transfer value. And I think many people are very familiar with the saying that in this market that The former internet was the internet of information, and now we're moving to the internet of value, where you can start to see value transferred through the internet. We very much believe this is the case, and I think this is the real beauty of the blockchain application for the commodities space, is that we think that the internet of value is coming and allowing people to transfer value from peer-to-peer without the need for a central authority to recognize that transaction in a trustless manner. And I'm very happy to say that I think that we are probably one of the first people in this space. I think I'm on time. So I'd like to open the floor to questions if I have any.
One question. Can we get the microphone down
Where are we?
question?
Oh, I saw one.
Looks like it might have been so comprehensive. We have a question over there.
There we go.
Hi, thanks.
Hi.
I'm curious a bit more about the fee structure. So
Yeah.
how will you earn fees on these transactions?
Okay, so like most markets in gold, physical gold often trades at a physical premium. So when people talk about the gold price, they're usually referring to, by default, they're usually referring to the unallocated local London spot market for gold. But you can't really buy at that price. That's the price for where the unallocated market trades in the interbank market. If you want to go and buy physical gold, then you usually pay a premium to the gold price. And we all work on the same basis. And typically premiums for bars are usually 3 to 4%. Coins can range from sort of 6 to 10% depending on the coin. And we anticipate that the market, which will define the price for RMG by its establishment of the price in the open market, would probably end up at about 3%, something like that. Then we also have a secondary network effect. So I think longer term, once a price has been established in the market for where this trades, we anticipate that the network effect of wallet transfers, in our privately permissioned network, we can apply a transaction fee for the transfer from wallet to wallet. So that fee is applied at a wallet level, and that's of single-digit basis points.
I've got a question.
Of course.
Sorry, I only have time for one question. Really do have to move on. Apologies for that.
Okay.
Big round of applause. Thank you very
Julian.
much, Tom.
Thank you.